Do you want to invest in tech stocks that can boost your portfolio's value and income in 2024? Do you want to invest in companies that are resilient, innovative, and profitable in the fast-changing tech sector? If you answered yes to all these questions, then you are in the right place. In this video, I'm going to show you my 5 dividend-paying tech stocks that you should consider adding to your watch list in 2024. These companies that I've researched have strong growth prospects, solid financials, and generous dividend payouts to reward you as a long-term investor. So without further ado, let's jump right in and talk about the first stock on this list. The first tech stock that I'm going to talk about is known for delivering both growth and dividends, and 2024 will be no exception. I'm talking about OpenText, ticker symbol OTEX. This company has been transforming itself over the past decade and is now considered to be a leader in the all-critical AI space. OpenText has been on a buying spree, snapping up companies where it makes sense, such as other tech companies like Micro Focus, to expand its portfolio of products and services. They're also focused on strategic partnerships with names like Ulta Beauty and Alphabet just to add to its monster growth profile. But what really makes OpenText stand out from the crowd is its ability to leverage AI to enhance its offerings and solve real-world problems for its clients. And that's exactly what you want to look for as a long-term investor, a company that is solving real-world problems. Because as they solve these problems, you get rewarded for participating in that solution. At its recent OpenText World event, they unveiled several new AI solutions covering everything from chatbots to document creation to shipment tracking. They're making sure they are strategic and laser-focused on the AI growth space. These solutions not only showcase OpenText innovation, but it's also a commitment to providing real value and security to its customers, and that's exactly what they're looking for. Value and security from its solutions. And as you can see, that's why OpenText is one of my top picks, especially in the AI space for 2024. It offers an amazing combination of a growth profile, dividends, and that's exactly what I want to see as a dividend investor. They have a proven track record of growth, a bright future ahead, and a very healthy dividend yield. So if you're looking for a dividend-paying tech stock that can do it all for you, you might want to consider adding OpenText to your watch list in 2024. Now let's take a look at Wealthsimple on how you can actually add OpenText to your portfolio or watch list. As you can see, I'm on the Wealthsimple interface. We have OpenText Corp right here, ticker symbol OTEX. And right now it's trading for around $55 a share. But here's the real cool part. In the last 1 year, it is up 40%. And you can see that's the benefit of investing in a tech player that's invested in the AI space. That's paying dividends because you get to be rewarded as a shareholder. And you can see the last 5 years, they've had their ups and downs. And it looks like we're at the phase of another up because of all the recent downs we've seen. And if we take a look at some quick stats on OpenText, as you can see, it has a market valuation of just under $15 billion, has a PE ratio of 31.54, and a nice dividend yield of 2.4%. So if you want to open a position and have about $1,000 to invest, that will get you a cool 18 shares of OpenText, and you're ready to add this to your portfolio. The next pick on this list has a strong history of growth, innovation, and more importantly, dividends. To me, this is a bit of a hidden gem. It is severely undervalued by the market. They have a ton of cash to spend on new acquisitions or just expansion. I'm talking about Inghouse Systems, ticker symbol ENGH. Inghouse is a company that's known for providing cutting-edge solutions for communications, network, and the transportation sector. They're known for helping their clients improve their efficiency, security, customer satisfaction. They also generate a ton of free cash flow. They have a free cash flow yield of over 6%. That's amazing, and those are some of the stats that I want to see as a long-term investor. But what makes Inghouse really attractive is that they have a huge cash reserve, close to $240 million, and no external debt. This gives them just so much flexibility to pursue growth opportunity, whether it's that right acquisition or whether it's expansion of a new product or service or a new market. And they have an amazing track record of acquiring companies. They can integrate smaller tech businesses, and they have grown their dividends by roughly 19% annually over the past 5 years. That is amazing. And Inghouse is not a new kid on the block. They've been around since 1984, and they have adapted their needs and their space, making sure they are ready, they are AI ready for this ever-expanding growth opportunity. It has embraced AI technologies such as chatbots and tailored its video conferencing services to very specific industries. And that's what makes them laser-focused for growth. When I look at tech stocks and Inghouse specifically, to me it's a rare combination that offers growth, value, and dividends. It has a dividend yield around 2.6% right now, and that may not seem all that high, but it is very reliable and growing. It also has a ton of upside potential because it's trading at a discount, which I'm about to show you when we look at Wealthsimple. It's trading at a discount of 60% based on its last peak. So if you're looking for another amazing tech stock that can pretty much do it all, just like we looked at OpenText, value, growth, dividends, you might want to add Enghouse to your watch list in 2024. Now taking a look at Wealthsimple, what happens if you have $1,000? How many shares can you pick up? Let's go ahead and look up Enghouse, ENGH. And here we have Enghouse. They are trading roughly around $34.68 per unit. They are up in the last 5 years around 9%. And in the last 1 year, they've been relatively flat. And that's why I really think this is a stock that's really been undervalued, because if we take a look at the last 5 years, there you go. There was a massive peak in 2020 where they were trading for roughly around $76 per share. They've gone all the way down to 25. They came back up, went back down, and there you can see starting up, there's another peak or growth trajectory starting to happen right here. Taking a look at some quick stats on the company, they're just worth under $2 billion, and they have a PE ratio of 26.53, and the dividend yield is just around 2.4%. So if you have $1,000 to spend on Enghouse, that will get you roughly 28 shares to start your position. My next tech stock has it all: value, dividends, and growth. And I know you've heard this based on the last two picks, but that is the point of this list, to give you some of the best dividend-paying tech stocks that you can add to your portfolio or watch list. This company that I'm talking about is challenging the status quo, and they are expanding their market share across the country. I'm talking about none other than Quebecor, ticker symbol QBR.B. Quebecor is known for operating some of the most well-known brands in Quebec, such as Videotron, and they made a huge splash recently when they acquired Freedom Mobile, which is a low-cost carrier that is disrupting the wireless landscape in Canada. And Quebecor is not just content just staying in its home province of Quebec and just growing in that region. They want to expand in other regions, Ontario, Alberta, BC, because they want to grow. And their growth strategy really comes down to two key points, and that's offering a better service for a better price point versus the big three in this space. But what makes Quebecor really attractive, and these are some of the stats that I love to see as a dividend growth investor, this is trading at only 10.89 times trailing earnings, and they have an amazing yield of 4%. What that essentially means is that you get a high quality dividend stock for a low price and enjoy that steady stream of dividend income. And Quebecor, it's a bit of a rare find in the telecom space because you are getting growth and value all in one package. And when I'm investing in a company, it's not just about the stock or what they're doing with their products and services. You also want to take a look at their management team, because they are the driving force behind whatever happens next. And with Quebecor, I am a big fan of their management team. They are smart, they're aggressive, and they are, most importantly, visionaries. And they know how to compete in a tough market, at the same time making sure they're creating value for their shareholders like you and I. And among other factors, that's one of the main reasons why Quebecor is on this list as one of my top picks for 2024. If you're looking for a tech stock that's in the telecom space that can deliver it all on all fronts, value, growth, dividends, you might want to add Quebecor to your watch list in 2024. It's a stock that's going to compound your wealth over and over again. Let's take a look at Wealthsimple and how you can either add this to your portfolio or to your watch list. Let's go ahead and look up QBR. There we go. And here we have QBR.B, Quebecor, and it's trading roughly around $30.49. In the past 5 years, they're up 5%. And what this shows is that, again, with other stocks, they have their peaks, their valleys, peaks, and valleys. So you can start to see these patterns emerging from the stocks I've been looking at. So you can see there have been some great entry points here, 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 and most recently in October of 2022, when they were just at 24, and that's skyrocketed to the mid-30s. If you want to add this to your watch list, or any stock for that matter when it comes to Wealthsimple, when you look up a company, there's a button right here with a star. Just click on Add to Watch List. And if you take a look at some quick stats on the company, they're valued at just over $7 billion. There's that PE ratio of 10.89 that I've been talking about, and they have a yield just shy of 4%. If you're interested in adding this to either your watch list or, let's say, your portfolio, and you only have $1,000, how much can you pick up? Here you can see you can pick up just under 33 shares of Quebecor and add it to your portfolio. If you've been following this video so far, my next stock pick should not surprise you, because it offers another strong track record of growth, profitability, and dividends. But this one allows you to own one of the largest telecom companies and telecom networks in Canada. I'm talking about none other than Bell Canada, ticker symbol BCE. Bell Canada is a company that's known for providing wireless, internet, TV, and home phone services to millions of Canadians. But not only do they do that, they also own some of the most largest media brands. I'm talking about CTV, Crave, and of course TSN. And one of the things that I'd love to see when I'm looking at these companies is how much cash can they generate? And this is no exception. Bell Canada is a cash cow. And holy smokes, like they are generating free cash flow over and over again. Just in the last quarter alone, $750 million of free cash flow. And they have ample liquidity to back that up with over $4.5 billion of liquidity. So it can easily fund its growth and reward shareholders like you and I for the long term. And this is not just a boring dividend stock that's just slowly growing. They are looking for growth because they are investing heavily in 5G, 5G Plus, and the broadband network. They plan to cover 85% of the population with 5G and 46% of the population of 5G Plus by the end of the year. And bear in mind, that is not easy. They're investing billions of dollars, making sure that they can expand. Those investments will just help BC attract more customers, increase their revenue, and increase their margins all at the same time. To me, Bell Canada is another tech stock that offers a rare combination of stability, income, and growth all in one package. It offers a dividend yield of around 7%, which is the highest among Canadian telecom companies. And here's the best part. Not only do they offer a high dividend yield, but they are growing that dividend. Just in the last 15 years, they have grown their dividend by an average of 5% per year. If you're looking for a tech stock that offers steady returns, passive income, you might want to add BCE to your watch list in 2024. And honestly, I think this is one of those tech stocks where it can help you achieve your financial goals, not just for the next year, but for the next decade and beyond. Let's take a quick look at Wealthsimple to see how much Bell Canada can you add to your stock if you have about $1,000. Let's go ahead here and type in this ticker symbol, BCE. And here we have Bell Canada. As you can see, they're down about 7% in the last 5 years. And again, with all the stocks we've been looking at, they have their growth, they have their valleys, they'll grow, valleys. So it really gives you some great entry points. If you do want to sell, you have some great exit opportunities. Bell Canada was down to less than $50 per share, and they're starting to see that uptick. Take a look at some quick stats on the company. They're worth just under $50 billion. They have a PE ratio of 21.26 and a dividend yield of close to 7.5%. Like, that is bonkers to me. When I see a steady company that's growing, paying dividends, rewarding shareholders, this number definitely jumps out. If you have $1,000, how much can you pick up? If I add my $1,000, I can pick up just over 19 shares of BCE and add it to my portfolio. And with my last pick on this list, I feel like I'm in an NBA draft or something, going with those draft picks. But anyways, with my last pick on this list, no surprise, you're going to get growth. You're going to get profitability. You're going to get dividends. At the same time, you can own one of the most innovative and expanding companies, not just in telecom, not just in tech, but in other areas I'm going to talk about. This is TELUS, ticker symbol T. TELUS is a company, it's very similar to Bell, but I'll show you where it starts to differ. They do provide that wireless, internet, TV services, and home phone services to millions of Canadians, but they also have a strong presence in health, in agriculture, in consumer goods, and they're expanding into other markets, and that's why I like TELUS as the pick on this list. They're offering digital solutions that are going to change the lives of its customers. You may have heard about TELUS Health. You may have heard about TELUS International. These are just some of the ways they're expanding outside of that core wireless internet home phone services. The numbers sort of speak for itself. This is a growth machine. They added over 400,000 new customers in the last quarter alone. That's year-over-year growth of 17%. But TELUS is not just a growth stock. The whole point of this is to give you growth stocks that add value and dividends. And this is no exception. At the core, this is another dividend stock. And they have raised their dividends 25 times since 2011. That is, again, no small feat. They have a forward yield around 6%, and we'll take a look at Wealthsimple. And they also are another major cash cow, just like Bell. They generate a ton of free cash flow, $355 million of free cash flow just in the last quarter. That's up 7% from the previous year. When you see that kind of free cash flow, you can get that warm and fuzzy feeling that they will fund their growth, but also reward shareholders at the side. And they are expecting that revenue to grow right alongside from its high growth segments such as health, such as agriculture in the coming years. And the management team feels confident that can raise their dividend in 2025 by between 7 to 10%. It is a stock that can help you benefit from the increasing demand of mobile connectivity, as well as the emerging trends in mixed reality and the Internet of Things. And that's why I love companies like Bell Canada and TELUS, because as an investor, as I'm going towards my financial goals, I don't want to make money just in the next year. I want to make money in the next decade and beyond. Let's take a look at Wealthsimple on how you can add TELUS to your watch list or portfolio. And this is one of the easiest ticker symbols to enter. Just type in T or TELUS. Almost. There we go. There we have ticker symbol T, TELUS. Just like Bell Canada, it's been roughly flat over the 5 years. And at this point, you're starting to see the trends, right? You can see the peaks and valleys. So peak of $27, valley. Big peak right here around 2022, $33. We get another valley. And we can start to see that little bit of uptick starting to happen. It has a market cap of just under $35 billion and a P ratio of 43.1. And that dividend yield, that's what stands out to me. That sparkly, shiny dividend yield of over 6%. So if you have $1,000, how much shares can you pick up? I'm going to type in my $1,000 right here. And I can pick up a nice 41 shares of TELUS to start a position and add it to my portfolio. And that's really it. These are my 5 tech stocks that are known for delivering value, growth, and most importantly, dividends. So thank you so much for watching and sticking around so far, making it to the end of my list. Hopefully you found some great names to add to your portfolio, your watch list, or wherever you decide to invest in your journey of financial independence. Make sure you hit that like, subscribe, and thanks button so I know that you want to see more content like this. Because like companies delivering value to shareholders, I want to deliver value to you as my subscribers. Make sure to check out all the links that I have in the description, because it's another way where you can support the channel so I can continue making more content like this. That's it for now, and I'll talk to you in the next one.